What's going on, trading family? Let's talk about the Federal Reserve, okay? Because this is going to be a very big topic because I want you guys to be able to capitalize on this edge when you're trading US economic data, or actually later this month if you're trading the rate decision. If you guys are interested in trading live with me, go to the link below in the description to join my private group, because that's where I'm going to be able to teach you guys fundamentals, but also how to take advantage and trade profitably with these opportunities. Plus being a part of a community that is like-minded, that we're focusing on growth in your personal life, but also learning how to make money in trading. So this could actually be your full-time job. All right, guys, but let's start with this. Will the Feds in September, will the markets bet hard on a cut, right? Because I want to give you guys ideas on why I agree with a cut and also the possibilities of them pausing interest rates, right? Because right now, for this later meeting, September 17th, that the markets is already pricing in a 90% chance of a 25 basis point cut. We can most likely cut off the odds of a 50, but that's if we get extremely bad data, like recessionary fear data. Would that increase the odds of a 50? Most likely. But the odds are 25 basis point cuts is going to be moving forward. So the cut case, why September is more likely, right? Because inflation is now closer to target, but it's not perfect. So PCE headline is at 2.6% year to year. July core PCE at 2.9% year to year. Month over month, right, is at a 0.2%. And core monthly is at 0.3%. This is pretty much the Fed's preferred measure is PCE, and inflation is heading towards target. Inflation is not really the problem, where CPI is setting at 2.7 and core CPI is sitting at 3.1% year to year in July. So this is exactly what the Feds want to see. They want to see inflation hit their 2% target goal, and it's really on track to that. So that's why inflation is exactly what they want. And the labor markets is actually cooling. Non-farm payrolls, July was at 75K week, right? Lower than expected, but unemployment also did rise to that 4.2%, where it shows 3-month hiring trends has slowed. So we're seeing the easing in the labor markets, which is key, right? They don't want to see the labor markets drastically dropping. They want to see a little bit of easing in the labor markets, just enough so that they could still cut rates, but not have to be afraid of recessionary fears. So next we have job openings, JOLTS in June. That came in at a 7.4 million, down from May. Hiring and quits ease demand, making that the labor markets is still cooling, right? So that's another good example. So now let's talk about growth. ISM manufacturing came in at a 48.7%. It's the 6th straight month that we're dealing with a contractionary print. This is where, even like today, right, we traded ISM data and it did come out lower than expected, right? So that gave us reasons to take advantage of a weaker dollar. That shows that slowed growth. So this is why paying attention to this data can give you an edge with trading the dollar. So I took advantage of USD JPY sells. So I want to go over now Fed's communication, right? Because Jerome Powell definitely at the Jackson Hole, he shifted his stance to more dovish than expected. Jerome Powell has been extremely hawkish for pretty much for this whole year. But the Jackson Hole, right, inflation moving closer to our objective. He also hinted that the labor markets are cooling. So that was the first, where he was saying that inflation was going to rise, but he's expecting the rise to be temporary because of tariffs. But inflation is still moving closer to their target, right? And then he also alliterated that the labor markets are actually cooling. These increase the odds for us of expecting more of a cut. We also had Fed Waller. She said that she favors cutting by a 25 basis point cut in July, right? And the data since support easing, which is really good. And then also we have July, the FOMC members, Bauman and Waller, in favor of 25 basis point cuts as well. This is definitely what we want to take advantage of for more downside. They're blaming it on jobs cooling, right? They're blaming it on manufacturing is contractionary, and this is opening the doors for additional rate cuts, okay? So let me know what you guys think. You think that is a good enough commentary, right, in order for you guys to believe that this September is in line for a cut, right? Let me know what you guys think in the comments. But now let's talk about a base case for a pause. What could actually stop that cut? This is where we're going to have to pay attention to upcoming economic data, because so far lately things has been qualifying for a cut, right? But core PCE, if we could see that at uptick, right? So it is rising, where core PCE did come up to 2.9%, right? That was the last print. And that was definitely a little shocker. Personally, if it was 3% or above for core PCE, because core is what the feds can control, I think that would have definitely caused a little fear that the feds is most likely going to remain at pause. So core CPI also is 3.1%, so it's still above target. This still shows that inflation is still sticky. But the conversation that we understood for Jerome Powell was that inflation rising was most likely temporary. So even though that the last inflation print that we had did rise, but that still goes with a temporary factor. Okay, guys? So next, let's talk about tariffs, supply impacts that could re-add to higher price pressure, right? So ongoing tariffs is uncertainty. We're still dealing with the court rulings, right? To keep levels at a just to keep levels at place right now. But tariffs is going to be the main focus for us, because this is what's going to impact consumers. And we're going to see high price goods because of the uncertainty regarding tariffs. So as long as that is still a factor, that is still giving the central banks like the Federal Reserve leeway to still say, let us pause rates because of higher inflation, right? Because of tariffs is actually causing the uncertainty. So, and now, when it comes down to the job market, right? If the job market continues to give us stronger prints, like this month, this week, if NFP does come out higher than expected, if we get an extremely hot print, this could add to the possibility for the Fed saying, you know what, we need to wait for more data. So especially if this Friday we get NFP numbers come out higher than expected, that could most likely cause more of a hawkish pause reaction. And then now we want to focus on wages and yields, right? So wage growth is hovering around at 4%. Understand that wages is inflationary. So long-term yields pushing up, right? And if we see that wages are higher, right, a hotter than expected wage print can be inflationary. It could accelerate arguments again that tariffs is going to be the focus. Tariffs is impacting the markets. It is causing higher inflation. So that alone, if we see a rise in wages, that's going to be inflationary. That will be another reason for the Feds to actually pause rates in September. Okay, so I just want you guys to really understand that we're going to have plenty of opportunities, right? So upcoming economic data is going to be extremely key. And this week is important because this is labor data week. So if we continue to see weaker labor data this week, weaker growth data, that would increase the odds for a possibility of a cut. But if we see that labor data does come out higher than expected, expect that pause. So remember, focus on NFP, unemployment, wages, okay? And you can focus on GDP and PMI data too, but it just depends more. It's going to be focused on inflation and labor, guys. All right, so hopefully this was helpful. If you guys have any questions, let me know in the comments. Have a good one.